Well, I think what's most interesting is this is clearly not driven by the data. It's not driven by fundamentals. The US data has been strong this week, and in fact, the ISM prices paid was like the highest level in a long time, which means that this is really counterintuitive moves, so it suggests it's properly a position squeeze. And we know that going into the end of last year, there was a really extreme consensus for long dollar. It was what everyone was thinking was the major trade of this year. So it's just a position clean out at the moment.
From an economic standpoint, you mentioned that the U.S. data was really strong. We've also seen some firm inflation data around the world, in Germany, elsewhere in Europe. How far, in your view, does this go? Is this just sort of a return to something normal, more related to oil, or is this the start of a real change in trajectory?
Well, I think you can see from the producer prices around the world, in China, in Europe, in US, everywhere, they're really going up. And that kind of gives a proper solid trend behind the inflation move at the moment. So I do think this can sustain for some time. On top of that, base effects, and considering what happened in the commodities last year, will mean that headline prints and inflation really beat in the next few months. However, longer term, is inflation going to run away? Are we going to see crazy levels of inflation? I think not. I think long-term disinflationary factors from things like technology and demographics remain. So I think the theme of this year will be inflation probably beating on the top side in the first half of this year, and then after economists raise their expectations, raise their kind of forecasts, then it will suddenly disappoint.
So that's how it works, huh? Just when economists start to really believe in it, raise their forecasts for inflation, then we're going to get disappointment. How come? Is it just that nothing ultimately has changed in the fundamentals?
Well, there's always an incentive for, most economists to stay roughly in line with consensus and slowly move their forecasts incrementally. I mean, it makes sense. It seems stupid if they're jumping their predictions up and down all over the place every time we get a new print, which means they incrementally move as we get more and more data, and then they're always slightly behind the turning point. I think that's always the way with forecasts, and that's going to continue to be the case.
Mark, you've been, let's talk about China, because you've been optimistic about the Chinese economy for a while, making good arguments that the bears don't understand. But there does seem to be some real anxiety domestically in China about the state of capital outflows. We've seen some pretty dramatic attempts to beat back the UN bears, dramatic strengthening in the UN to start the year. How do you analyze the country's capital situation and the future of the UN?
Well, and I think the main thing that's happening in China is obviously the currency, and there's a real kind of panic around that. And the thing is that in China, they do focus on the dollar CNY level, and that's what they need to stop. And with the dollar really strengthening into the end of the year, that was causing a lot of concern domestically. So the PBOC have taken a lot of measures in the last few days in particular to really try stemming that, and it's working for the moment. Can it continue to work? I don't know. What's important to note, though, is the yuan has actually been stable to strong in the last couple of months. I mean, since the election was actually the low for the yuan against the basket. It's been stable, slightly stronger since then, against the basket of currencies. So it's been more about the dollar move. Now, if the dollar can start weakening, then the concern around the yuan will disappear very quickly, even if the currency is not doing well against the basket. If the dollar is strengthening, even though if the currency is doing well against the basket, then everyone gets worried about dollar CNY. So it's really all about the dollar here, and that's what the PBOC is concerned about.
Okay, so we have the UN move, we're watching inflation, we're watching perhaps some of the unwind of a very crowded trade on rates. What's another thing that maybe people aren't paying enough attention to that they should be in the start of this year?
Well, I think, two of the factors are, one is that I think growth generally in the world is really picking up. And I think people are probably a bit behind the curve about how much it's actually picking up. The data has been exceptionally strong everywhere in the world, and it continues to kind of beat expectations. And so I think that growth pickup is probably bigger than people think. The other thing that's happening at the moment is that, people need to be reminded that when central banks do step away from markets, the markets can do funny things for a while. And what we're probably seeing this week is a little bit of a position clean out. For example, we can see the dollar squeeze, the dollar can probably fall several percent and still be in a long-term uptrend. And I think everyone's going, no, but wait, the fundamentals are good for the dollar. The fundamentals are good for the dollar. I want to buy this dip. I would say probably, once central banks step away, don't rush to buy those dips too quickly. Leave fundamentals time to play out. Leave corrections to, properly make their move. So, for example, dollar yen, it's risen from 101.20. It's still 14% above the level it was on the 9th of November, which means even after the correction. This means dollar yen can follow another 4 or 5% and still be in a long-term uptrend. Don't rush to get back in too quickly.